Hey traders, welcome back to this week's weekly Forex forecast. Last week was a pretty amazing week in many ways in Forex. I've been doing this a long time, and last week the move in euro dollar was absolutely massive. And many of you will know that last week I started the week quantitatively. We had the risk off assets looking pretty strong. And I was looking really overall for euro dollar to the downside and actually some dollar strength. And so let's just go back and recap from what we're looking at last week, because some of you asked in the comment section last week, can we cover euro dollar, explain what went down with euro dollar this week? So let's start off by doing that, and then we'll go through into the setups for this week. But last week, this is how we went into the week. So we come in, and the quantitative data is always the most important, because many times I've looked at technical analysis over the quantitative data. I've tried to place the technicals over the quantitative data, and what's ended up happening, almost inevitably, I ended up losing money, because the quantitative data is the most important. Last time I did that, I shorted Swiss franc versus the yen instead of New Zealand yen. They both went down. Swiss franc went down a little bit against the yen, and the New Zealand went down a lot against the yen. And out of the two of them, HedgeDash, the quantitative data, was saying you should be short the New Zealand, not the Swiss franc. So went to last week with the risk off currencies basically setting up as the best opportunities heading into the week. And the US dollar was sitting like this technically. So we come into the week, and I'm looking at this, we break up, we make a new high, and we're sitting on a weekly time horizon right at the prior high. We've broken above the moving average in the weekly, we come back and we test it, and we finished the week last week with an engulfing weekly candle. So not only was I looking for dollar strength setups last week, because the quantitative data was there and the technicals were there, but I was also looking for potentially the start of a major move higher, not just a small move higher, but the next leg up. So we come in at the start of the week, and we start to see, and I'm looking at this, let's drop down onto the 4-hour time frame. So this is how we start the week. Now, very often Monday or Tuesday, and I say this to members all the time, in fact, we trade this setup a lot, where a market will be up like this, and then coming into Monday and Tuesday, you tend to see a reversal, a pullback, because if you're going to have, let's say, a week to the upside, a weekly candle printed, it usually tends to paint a lower wick and then it goes. And that kind of reversal for 1 or 2 days either sets up the opportunity to get long, or, you know, the reversal itself is also a good setup. So we come into the week and we're starting, I'm looking at I'm looking at DXY here. So I'm not looking at euro dollar, I'm looking at DXY. And I can see we've got a consolidation, and we break up, and this looks like a one-way. So now we're going from the weekly down into the 4 hours. So I'm looking to begin the week at this. I want to see a pullback. I want to see a kind of second wave. I want to see this kind of nestling into the moving average. So just as we broke above the moving average and pulled back to it in the weekly, and we're sitting like this, I wanted to see exactly the same thing in the 4 hours to combine that. So we start the week, and we get the market pulling back. And I'm looking at this, everything's looking pretty good. Then on the Monday, we get a bit of a sell-off like this. And I'm thinking, you know, that's quite deep. I would like to have seen not momentum. I would like to have seen this stay corrective, okay? But we could be coming down to the right shoulder, right? So we're still kind of testing that weekly breakout level, you know, where the left shoulder was. And I'm looking to get long dollars. We kind of chop around a little bit, and then on Monday, we get the pullback, and right here on Tuesday, we get this sell-off. And on Tuesday, what happens? We get this. The German government comes out and says that it's going to undo a very, very long-term policy of, you know, basically Germans have been very, very known for being conservative on the fiscal side, you know, saving, not spending. And they come out and say they're going to try and put this through the parliament before the next parliament takes hold. And what they're looking to do is to spend upwards of 500 billion euros, so €500 billion on the fiscal side. So of course, what happens is this is inflationary, massively inflationary statement and intent from the German government. So what happens if we're going to have a lot of inflationary spending? Bond yields, so people who are holding bonds, they start to look at that and they say, I better sell my bonds, because if we're going to get inflation, the value of my bond is going to go down. So they sell their bonds. And as the German Bund collapsed last week on this news on Tuesday, we see yields in Germany going through the roof. So interest rates are essentially now rallying very, very sharply in Germany on their bond yield, on their debt, as traders are just selling the debt, as they're selling the bonds to get out of them, because if we're going to see inflation in the future, this is going to reduce the value of their bonds. So they're selling them now. And we saw bonds collapse on this on Tuesday. Now, even though this was a euro strength story, because what happens when you see bond yields going up, you see the currency following the yields higher. As interest rates go up, this is bullish for the currency. So we're in a situation where we started to see a lot of money coming into the euro because of this announcement on Tuesday. And this announcement is what would be termed an unexpected catalyst. Because when you're trading, you've got expected catalysts and you've got unexpected catalysts. Expected catalysts are news events, CPI data being released, interest rate decisions, press conferences. These are all in the economic calendar. So we know that they're coming. But statements from governments on the fiscal side, unannounced statements that people in advance are not expecting, these are major catalysts in this case, but they're unexpected because they sort of come out the blue. And as traders, we have to be prepared to deal with both. Expected catalysts and unexpected catalysts. Both of those are a part of trading. Expected catalysts are easier to deal with because you can just sidestep them, right? You can say we've got CPI on Wednesday, so I'm just not going to trade on Wednesday. A big move happens and then you step back in afterwards. Unexpected catalysts are more difficult because, as the name suggests, they're unexpected. So once the information comes out, we see bonds collapsing and we see money flooding into the euro. And as a result, we see the dollar index collapsing. Now, again, this is not so much a dollar story as it is a euro strength story, but the euro makes up 57% of the dollar index. So we just started to see this absolutely fall out of bed last week. And it continued down, and we got all the way down last week in the DXY to the 103.711. And that's where we finished the week. Now, why is this significant? Because this is something we need to pay attention to coming into this week, because we've had huge weakness in the DXY, but this was the third lower bound last week in the dollar index. When was the last time we hit the third lower bound in the dollar index? Right here. So the third lower bound in the dollar index is very often a capitulation low. Now, it was easier to highlight this as a capitulation low, put it out on Twitter. Look, the dollar has probably bottomed right here. Everybody was looking for a major breakout. It was because we traded into that third lower bound and we had a big move up in the dollar. So are we going to get that coming into this week? It's very difficult to say, just because if this was an ultimate low, if this was down here in this area and we started to see that capitulation down here, that would be a much better indication that that is a capitulation low. Because it's sort of coming from the top, it could be a capitulation low, or it could actually be the start of a major trend change to the downside. So again, if it was an ultimate low, I'd have a lot more confidence saying that it's a capitulation low. But going into this week, this is important because although we have to be looking at this, at least for now, for potential further downside, this market almost certainly for at least a day or two, and it might pop down, you might get a Monday down day like this, but it has to pause. It has to correct. And so I am looking for at least, maybe Monday through to Wednesday for the dollar to bottom and to pull back. And that is something that we need to think about, when we're assessing pairs going into next week. And also the euro, do we want to jump in right at the top of the euro if it's going to pull back for a day or two? Something we need to think about. But that's what happened last week with the euro. We had almost a 5 standard deviation week. That means at the beginning of the week, markets were pricing that kind of moving euro dollar at less than 0.01%. In other words, the markets were saying last weekend, there's a 99.99% chance, if not more, that a move like that will not happen. And yet it happened. Why? Because we had the catalyst. We had that massive unexpected catalyst on Tuesday. So something to think about as we're going through the markets, because I will be referencing back to the 3 standard deviation sell-off on the week in DXY when we're looking at the setups. Okay, so moving on to the portfolio selection. I'll try and keep the portfolio selection a little bit shorter this week because I did spend a little bit more time going through euro dollar just now. And so what are we basically looking at coming into this week? We have to take into account what happened last week because it's not as straightforward as just picking the top 3 when you get a 4 to 5 standard deviation move in something like EuroDollar, or a 3 standard deviation move on the week in DXY. So coming into this week, the currencies to the downside are much clearer. New Zealand dollar shorts is my primary theme that I'm going to be looking at. Aussie dollar shorts, Canadian dollar shorts. Now we come to the currencies to the upside. So the euro would be number one here, because we're looking at this really, money was just coming out of everything going into the euro last week. So on the basis that we're not 100% sure at the moment if that is a capitulation low in the dollar and we're going to get a massive snapback and the euro is going to give up all those gains, or if this is the start of the next major trend move, we have to really still be looking for the time being, especially as it's strong quantitatively, at euro longs. So following on from what we saw last week. But here's the thing. Remember how extended that move is to the downside in the dollar index. In the euro itself, on a rolling daily basis, quantitatively, it's now saying we have a 95% chance of pausing or reversing lower. That means that the move is almost certainly done and it needs to pull back, even if it's just for a few days. And maybe it pops up on Monday and then spends Tuesday, Wednesday, Thursday pulling back. Maybe it pulls back Monday, Tuesday, into Wednesday. Either way, it's really running out of road. It's just moved too far, too fast, and it has to pause. It doesn't necessarily have to reverse, but it has to pause. So if that's the case, we will look at euro setups to the upside, but just bear in mind that all of these markets are right up here. So I do expect, even if we get a pop higher on Monday, for these markets to correct and pull back next week. And that is where I'll be looking at potentially some long opportunities. It should be caveated by saying the euro is extremely volatile, so I wouldn't be surprised to see deep tests of the buy zones and the sell zones, because the markets are very volatile, in the euro pairs. So something just bear in mind if you are trading them, volatile markets are not for the faint of heart, because you have big swings in the markets. It means your wins and your losses are bigger. And if your wins and losses are bigger, for many people, this correlates directly to emotions, right? Big swings in the P&L, big swings in the emotions. It shouldn't be that way, but especially a lot of new traders, their emotions are tightly linked to the swings in their P&L, and swings in their P&L are dictated by market volatility. So just bear that in mind if you are trading, especially the euro pairs. Nothing wrong with sitting out volatile markets. Opportunities will be coming along all the time, every single week. If you sit it out for a week or two, who cares? It's not a big deal. So no problem with not trading euro pairs at all last week, but we are going to look at them. I am going to be looking to step back in, test the waters with some euro longs next week. Now on the flip side of that, the yen, the pound and the franc. Well, if we look at, out of all of those, none of those are as correlated to the euro as the dollar is. So if the euro is set to pull back even for, a week or a few days, I would be looking for the dollar to move higher. Even though we had that big sell-off, I would be looking for the dollar to move higher. So you can look at the US dollar pairs, to the upside next week, but, they're likely to kind of pull back, and after a few days, you may find that you start to weaken or sell off again in the dollar. So what I'd like to do is, as the number 2 going into this week, is going to be the Swiss franc. Why? Because the Swiss franc is very, very much like the euro, right? It's a European country. We're seeing money coming into the euro. And before they removed the peg, the euro and the franc were basically the same currency, the 120 peg. Famously removed it. He had a big sell-off. That's why, I don't trade peg currencies. And the third thing we can look for is the pound. So we can look to the pound to the upside because, again, you've got that kind of EU outperformance edge potentially in the pound pairs. So coming into this week, we will look at euro dollar, of course, because we look at euro dollar every single week. But I do like EurCad, EurAusd, Euro New Zealand to the upside. I also like New Zealand franc to the downside, Aussie franc to the downside, CAD franc to the downside. And we'll also look at pound New Zealand to the upside, pound Aussie to the upside, and pound CAD to the upside in today's video. Okay, so kicking off the watch list, as we always do with crude oil, and crude oil actually played a part in the euro strength story last week, because what happened is we've been looking, at crude oil to the downside. This is a market really I'm looking to be short or do nothing, especially going into this week. And last week we came all the way down. We had a big sell-off to the second lower bound. It's 2 standard deviation sell-off on the week in crude oil. Now that exacerbated the euro rally even more. Why? Because We just went through all the reasons why on the demand side, demand came flooding into the euro because bonds, basically crashed or sold off, and then we saw interest rates on the bonds going up. So the yield differential, for the euro was getting better. Demand comes into the euro goes up. Well, the other side of that equation is the US dollar. As crude oil starts to come down and sell off, this drags US yields lower because it's disinflationary. And so we actually had, not just on the demand side, European yields going up, but we also had downward pressure on US yields last week. And as a result, the differential between the German yield and the US yield absolutely rocketed, and along with it went EurOd to the upside. So coming into this week, I am looking for short opportunities only in crude oil. What I want to see is the market pull back, enter the sell zone. And again, it's rare to take out even second upper bounds in a week. Weeks like last week, the week before, we're hitting third upper bounds. Some of these markets in the euro pairs, we're hitting fourth upper bounds. EuroDollar, EurCad, really, really anomalous kind of markets. Basically, we saw a crash in Forex. If you took that and you applied it to equities, it would be like an 08 style crash. It's that kind of a move. It happens rarely, but when it happens, it's a big move. So coming into this week, I do expect things to settle down. I'd like to see crude oil trading into the sell zone. And if possible, I'd like to see crude oil taking out these highs over here. We do have the kind of double top low over here. So this would be nice. So if we, I would be looking next week. If we test the underside and we just wick this is where I'm going to start to look for momentum to fade. And I'm going to look to be a seller. Again, that kind of rug pull with EuroDollar or, DXY last week, you shouldn't expect that to happen every single week. It's a very rare occurrence. So I am looking for a potential reversal from above the 69.28 in crude oil next week. If we get to the second upper bound, this would be the second place as always. I'd be considering a second potential short for a cost average position to risk manage this. And the third and final thing, you can look for that breakout trade intra-week. And again, you saw last week, you get volatile markets like EuroDollar, the breakout trade stuff actually starts to work. So when you get volatile markets or asset classes like crude oil, commodities, that breakout stuff does work very well. You can look for the reversal back down below the moving average, that first pullback into it, and you get that bear flag set up down to the prior low, into the buy zone or profit taking zone next week at 64.81. So it's either short or do nothing for me next week in crude oil, cannot buy crude oil. Okay, so kicking off with the euro pairs, starting with EuroDollar. We look at EuroDollar every single week. We just went through how the DXY hit 3 standard deviations to the downside. Last time I did that, it was a major capitulation low, but it's difficult this time, or more difficult at least, to know whether this is going to be an absolute high and this is going to give all this back, or whether we're going to pull back and continue. So if you do decide to trade EuroDollar, you are accepting the volatility that comes with that next week. So what I'd like to see in EuroDollar, and we pushed up last week, we kind of gapped up and we started to push up, and I actually shorted EuroDollar about here last week. I took a short, sent it out to GMT members. I'm short here. This is where I'm looking for a reversal. It went straight through. You see this candle? Straight through where I entered. And then I began to look and said, hang on a minute, something is not quite right here with what we're seeing. That is already, I could see that was abnormal. That wasn't, a normal kind of move based on where we already were. And I actually exited it on this pullback for break even. I got out right here. Again, all time stamped, with GMT members. We came all the way up. Actually ended up shorting this gain up here, had a nice trade up here. But is this, is this the major double top here? This is the point. So coming into next week, on balance, I do think to start the week, even if this comes up and tests the high again, I would not try and trade this intra-week because this is extremely overextended. Any, longs at the start of the week are likely, even if we get one more push up, they're likely going to end up rolling over. So I would only consider this for an opportunity if we could come below the 1.07255, and then I would begin to look, how do we come below into this buy zone? Because once we enter this zone, we're oversold during the week. Once we enter this zone, we're overbought during the week. So, I'm looking for strong markets to become oversold so I can step in and buy them. I'm looking for weak markets to become overbought. And, if something goes 3, 4, 5 upper bounds, this is extreme. Again, this is kind of like an 08 style crash in Forex, but, to the upside because pairs can go up and down. So that's what I'd like to see. I'd like to see this coming below the 1.07245. Then I'd begin to look. We become oversold during the week. What I want to look for is, are we corrective? Are we chopping around down here? Are we starting to lack momentum? Because this is a good example from last week, initially looking from shorts around this area, but look at the momentum. And we pull back, more momentum. Small pause, more momentum. There's no buyers kind of running out of steam. Very often I'll say to you, I'm looking for sellers or buyers to start to struggle, to start to run out of steam, for momentum to slow. Momentum is accelerating, then this is an indication of continuation, right? So if we come down here and we start to see this chopping around, just as we're already starting to kind of chop around and run out of steam here, all the way up, and then we're starting to run out of steam. That's where I'd be looking for a 1 or 2 day reversal to the upside in euro dollar. If we come down to the second lower bound, which actually next week wouldn't completely surprise me just because of how volatile this asset currently is, I would also consider a potential 1 or 2 day reversal. And the third and final thing is, the intra-week breakouts, I would leave that not just on euro dollar, but all the euro pairs, because these markets do have to pause and correct. And if you get involved midweek in long positions, you may get lucky, but there's a very, very good chance that they snap back. So I would much rather wait for them to pull back first before looking for any longs in the euro pairs next week. We're in a very unique situation in the Forex markets. Nothing wrong with being patient and just, using a bit of caution next week still. Next is Euro New Zealand. Again, I would not bother with any intra-week stuff here because this is so overbought that, in my view, and quantitatively, because my view is based on the quantitative data, that this is at risk of a snapback. It could push higher. I'm not saying it can't do that, but is that something want to step in and buy? It's too risky for me. I'd much rather this came down. There's a nice low over here. If we could come down, enter the buy zones, we've become oversold in a market that's actually looking pretty strong. This is where I'll be looking. Do sellers start to struggle? Does momentum start to fade? And then, do we get those reversal patterns? That's where I'd be stepping in for 1 or 2 days. And that's what I'm looking to capture, 1 or 2 day reversals. We enter here, I'm looking for this to sell off for 1 or 2 days. We enter here, I'm looking for it to rally for 1 or 2 days. That's what I'm looking to capture out of 5, right? We're trading 5 days in the week. The second thing is, if we do come all the way down to the 1.8647, and again, I wouldn't be completely surprised if it did that, just purely based on the major volatility we've got in the euro pairs at the moment. This would be the second place, whether I'm long already or not, I would be looking and considering a potential long opportunity to the upside for 1 or 2 days. And again, the intra-week stuff, I'll leave that completely in the euro pairs next week. Next is EurAusd, another market that has to pause. Does it pause from here and pull back? Does it make a new high and pull back? We don't know. But we know that we're in the ballpark now of a high risk of this reversing. So again, I'd like to see this reverse first. I'd like to see it come down, enter the buy zone, especially this would be the first place I'd look. This low right here, we take out this low, I'd be looking, the sellers that are trying to break through here, are they struggling? It's important to look, do we have momentum? Do we have momentum fading? Those two things are important signs as to what's coming next. If you blast through this low with momentum, you're probably going to pull back and make another low down to the second low bound. If you hit this and you start to struggle and you start to form a double bottom, that's where you get, sellers liquidate and you get the reversal. If we do come down to the 1.68877, we are extremely oversold during the week. This would be the second place. I would be looking for a potential 1 or 2 day reversal. And again, intra-week stuff, I'd leave this because of how extended these markets are to the upside. And the final euro pair is EurCad, also a market with a 4 standard deviation, nearly 5 last week. So very much like euro dollar, this has to pause and correct. I do think at this point, going long kind of at the open, again, it might pay, you might get another pop higher, but it is risky. I wouldn't personally bother. I would like to see this pull back first. I'd like to see the correction take place, and then I could step in with a bit more confidence. There's a nice low down here. So I'll pull back into this low. This is where I'm going to start to look next week. Do we get price stalling out? If so, are the sellers going to pull their positions? That's where I'm going to be looking for potential long opportunity for 1 or 2 day reversal. If we come all the way down to the 1.53194, which I think is on the cards, at least next week, that is the second place, whether I'm long already or not. Hopefully I'm not already long, because then I'm just trying to risk manage it. But if I am already long, then I'll be looking to risk manage it. If I'm not already long, this would be a good initial position. Start to look. Again, just because it hits the second low bound doesn't mean you have to jump in. What's happening there? Are we starting to see sellers run out of steam? Or are, like last week, we're just seeing, in euro dollar, buyers just flooding in which case you might just want to step back and just say, like I did, with euro dollar and a lot of pairs last week, just saying, look, I don't want to get involved with these. I already had a couple of shorts. They didn't really work last week. So, you just step back and say, let's just see what's happening. Let's see what's shaking out first before we jump into stuff. Again, I'd leave the intra-week stuff on Euro pairs. Personally speaking, next week, they're too risky at this level. Okay, so moving on to the Swiss franc pairs, I can either be short or do nothing in New Zealand franc next week. I cannot buy this market. And look at the up, big swing down. I mean, compare this to, you know, chopping around over here, which is what the market does, you know, 90% of the time, 95% of the time. We're just doing this, chopping around. Maybe we get a bit of momentum down, but then look at this, big swing up, big swing down. This is the kind of volatility that I'm talking about. It's difficult to trade. P&L swings with it. You know, you can obviously reduce your size and mitigate that in different ways. But generally speaking, you know, this kind of stuff is what we've seen over the last 2 weeks. Not just last week, we saw this the week before as well. I wouldn't be surprised if it actually entered this sell zone quite deeply, because again, if we still got this kind of volatility in the markets, you know, we could get halfway. We could have a very deep test. And then I'd begin to look, you know, this high is actually this is quite far up. Maybe it tests that because the volatility swings are much bigger. If it does test that, I would be looking in this area at a potential short for a 1 or 2 day reversal. If we end up taking out the second upper bound, this is where I do get the ability to short again if I want to. And again, I would still only be looking for a 1 or 2 day reversal. And the third and final thing is, you know, with the New Zealand franc pairs, they pull back towards the upper bound. If they don't get there, if they look like they're making their way, but they don't get there, and then they re-break the moving average, that sets up your bear flag setup, first pullback into the moving average. You can look for that down to, in this case, profit taking zone at the 0.49668. Next is Aussie franc. Again, I can either be short or do nothing. Cannot buy this market next week. And again, you can see these big swings to the upside, to the downside. So if we pull back and we enter the sell zone, there's no real high over here because of how volatile this was. So when I don't have a high on the left-hand side, which is obvious, you know, like a key area of prior resistance, like over here, for example, comes and tests it, then usually I'll look for it to form its own kind of highs. In other words, I'll look for it to push in, pull back, you know, and then make a double top over here, create a resistance, and then trade into it, right? And then, you know, look for the buyers to run out of steam, and that's the cue for a liquidation. If we blast all the way through and take out the 0.5670, this is the second place. I do get the opportunity to pull the trigger on for a second short position if I wish. And again, I would only be looking for a 1 or 2 day reversal. And the third and final thing, if we break above the moving average, but we don't take out the upper bound, you can look for the re-break in the direction of the trend, first pullback, and that sets up your bear flag setup into, in this case, great profit taking target to the downside, the lower bound at the 0.5488. And the final franc pair is CAD franc. I can either be short or do nothing. Cannot buy this market next week. I want to see this pullback, enter the sell zone, and there is actually a high over here. I mean, this is pretty much something we could look at, you know, as a key area of resistance. If it comes in, test this, especially if we're still getting much bigger volatility swings. I would start to look for buyers to run out of steam. If they start to run out of steam and you get this kind of reversal pattern, that's where I'll be looking at stepping in for a 1 or 2 day liquidation. If we take out the 0.6240, I do get the ability to take a secondary short if I wish from above this area, because now we're extremely overbought during the week. You know, 95% of the time that will essentially mark the high, you know, give or take a day. So it can be difficult timing. Obviously, timing is the most difficult part of trading, but in that area, you would expect a 1 or 2 day reversal. And third and final thing is, if you break above the moving average, but you fail to take out the upper bound, that sets up potential bear flag setup where you re-break, the moving average follows, you get your first pullback. Some people might try and trade that with a Fibonacci or whatever. You know, however you like to trade that, a nice bear flag setup down to the 0.6064. Okay, so wrapping up the Forex markets with the pound pairs before we move on to gold and silver. Starting with pound New Zealand, I'm looking to be a buyer of pound New Zealand given the opportunity next week. Notice, by the way, a similar move. We take out second, third upper bound in pound New Zealand, and then we pause. You know, this is the kind of move I'm expecting in the euro pairs at some point next week. You know, maybe again we push a bit higher, but this kind of pullback is almost certainly coming in the euro pairs. It has to pause and correct. It can't move like that forever. So I would like to see pound New Zealand coming back down. If it does, we set up actually quite a nice A, B, C. Take out the prior low. This would be an area right at this low here. I'd be looking for sellers to drive through here and then stall out. And if they do, I'm going to be looking for a 1 or 2 day reversal back inside the range next week. That is where the following week, if we do that, you can see the next leg up, you know, and then you get the breakout of this ABC. But next week specifically, I'll be looking for 1 or 2 days up. If, as unexpected as it is, although maybe more expected, you know, with the kind of height and volatility we're seeing, although I don't think we will come down here, but if we do come down here at 2.2234, we take out these highs especially, This is going to be the second place next week. I will consider a 1 or 2 day reversal to the upside in pound New Zealand. And because we've started to correct, we had the big move. This is where I'd say don't, attempt those kind of intra-week breakouts because you get the pullback, the bigger correction. Now we've got that. If we make our way down, we fail to take out the lower bound and re-break, then that sets up your potential bull flag setup into the upper bound here, the 2.2827. Next is pound Aussie. I can either be a buyer or do nothing. Selling this market is not an option for me. So what I'd like to see is I would primarily like to see pound Aussie coming down, taking out this low here. We do have another low down here. So both of these I would look at, and if we come down and we blast through here and there's no kind of selling fatigue, right? We just blast through. Well, then I'm saying, okay, well, where's the next one down? Here, right? And then we hit this. And then maybe here we start to run out of steam, right? Then I'll be looking for 1 or 2 day reversal. Now, if we come down, take this out first, and we start to run out of steam here, this is where I would start to consider a 1 or 2 day reversal, right? So I'm looking, where are the sellers getting trapped? Where are they starting to pull their positions? If we come all the way down to the 2.01389, again, not expecting this to happen, but if we do, it's the second place I can consider a 1 or 2 day reversal to the upside once again. So either a first or second long opportunity from down here. And the third and final thing is, if you break back down below the moving average, but you fail to take out the lower bound, you get the re-break. That often sets up your bull flag setup, because at that point, if you're failing to take out the lower bound, you can take out the upper bound. So that sets up your bull flag setup into the 2.06670. Now finally, we have pound CAD. I can either be a buyer or do nothing. I cannot sell this market next week. Again, I'd like to see this pull back. Ideally, take out this low. This is where I start to look. Are the sellers struggling, running out of steam? If yes, I'm looking for that 1 or 2 day reversal. If they trade straight through and take out this low, are the sellers running out of steam here? If yes, 1 or 2 day reversal, right? If we blast all the way through, take out this level, and we hit these highs, then I would look as well. I'd say, again, are the sellers running out of steam? Because, if they just keep going through like a hot knife through butter, like EuroDollar was last week, then you're not seeing any fatigue. You're not seeing any kind of momentum fading, right? That's a sign. Maybe you just need to wait. Maybe you need to be careful, cautious, and just wait for the sellers to start to show they're struggling, and then you can step in, okay, and look for the reversal. And finally, you break down below the moving average, as always, fail to take out the lower bound and re-break. That sets up often a nice bull flag opportunity to the upper bound, in this case the 1.8725. I can only be a buyer, cannot sell this market next week. Okay, so wrapping up the video with gold and silver. Now on a short-term basis, I do technically have a bullish bias on both gold and silver because I have basically a bearish bias going into next week on the dollar. However, the big problem next week with the dollar and the dollar pairs, which I think could make them difficult to trade, is that yes, the dollar is weak, but it's so weak, it could actually be a major low, which snaps back quite viciously. So the dollar pairs could actually be quite difficult to trade next week. And because we're looking at gold, silver priced in dollars, the same kind of applies for them. Out of the two of them, gold and silver, if I was going to step in and buy one of them, it would probably be gold. Gold would be the one I'd prefer to buy. So what I'd like to see is if gold comes down next week, breaches the 2850.00, we become oversold during the week. Here is a really nice low. We take out this low, and there's actually one just below it. So we come in, we take out this area here. This is where I'd begin to look. And what I'd want to see in the dollar at the same time is, because what I'm assuming here is that the dollar is so weak, as usual, we get this kind of pullback. And as we get that pullback, this pushes gold down. But then what I want to see is, I would really want to see, is the dollar kind of running out of steam up like this? Because if it is, and it looks like it's going to roll over, that would give me confidence to step in. If the dollar is just V-bottoming, and instead of corrective moves, instead of coming up here and getting corrective moves, we're just seeing this, then I might say, that actually could be a capitulation low, right? Because we're getting the same momentum we're getting down, we're getting up. So just like last week where we saw EuroDollar just going through the levels, you could see that on the flip side if you get that kind of V-bottom capitulation low. So I'd be a little bit wary of shorting the dollar next week, not because it's not weak, but because it's so weak, the snapback could be quite strong. But if I am going to be looking for a buy opportunity, it'd probably be this. If we ended up down below the 2790.57, this would be the second place I'd be looking for a potential 1 or 2 day reversal to the upside. But again, I would be looking at the dollar. What's the dollar doing? If we take out this lower bound and the dollar is still V-bottoming, I might just leave it, right? But if the dollar looks like it's going to start to roll over, because it hits a high, it attempts to break it, it fails, you know, it struggles, and then it starts to roll over. Then I might step in, you know, here, right? Because then I'll have a bit more confidence that we're not just going to blast, you know, all the way through the levels on the other way, you know, in the dollar. So that's what I'd be looking at in gold. I would leave the intra-week stuff because I do think that, you know, the dollar has to pause or correct higher at least. Even if it's not going to V-bottom, it has to pause and correct higher at least. And I think that's going to mean buying gold and silver, you know, from the open towards the upper bound would be risky next week, just like with the dollar pairs already discussed. And finally, we have silver. I'm not a huge fan of silver next week because I wouldn't really want to short it because the dollar's weak. But at the same time, you know, if this does come down into this area, we test this low, you know, maybe you could look at it. But the problem is, again, if we get that V bottom in the dollar like we did back in July when we hit the third lower bound, you know, this could go to its second lower bound quite quickly. And silver is a volatile asset class. Okay, again, you can beta adjust that, reduce your position size or whatever. But still, you know, as a setup, I don't think it's as good as the other Forex pairs we've been looking at. So if we take out this low in the buy zone, I would potentially consider a long position, but only if I started to see the dollar index having reverse stall out. I would leave any intra-week longs because, you know, basically what you're doing is you're shorting the dollar at, you know, 3 standard deviation sell-off. So that is highly risky, you know, because very good chance this snaps back, which means it pushes silver down to the lower bound. So the third thing then would be, you know, from a long opportunity down below the lower bound. Well, in that scenario, again, I would be looking at the dollar. Is the dollar starting to fade and potentially roll over? If yes, maybe I would consider stepping in. But generally speaking, the dollar is a difficult one to trade next week, or could be a difficult one, because again, it's weak, but it's so weak that we could actually see strength. Make sense? So I'd really rather stick to those other Forex pairs that we looked at as primary opportunities next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge platform is included with every GMT membership.